So question 4a, we solved the 4b earlier. That's on short term, the make or buy thing. So the A is chartered limited. The requirement for 10 marks I is compute the material quantity and price variance, labor rate and efficiency variance, variable overhead spending and efficiency variance, and then fixed overhead cost variance. And that is 10 marks. Then I says, give one possible reason for each of the variances computed in I. And so that is 7 marks, and in total, that gives us 14 marks. Now, when it comes to calculation of variances, we have what we call the variance tree, and that is, we have the material there, we have the labor there, direct material to be specific, direct labor, and then we have the overheads, then we have the sales there, then we have some advanced variances. So under the material, two things. We have what we call direct material usage variance, direct material price variance. So these are the two there that the examiner is saying we should calculate. When it comes to labor also, there are two things there. Direct labor efficiency variance, direct labor rate variance. Then we come to the overheads. Under the overheads, we have two broad issues there. We have the expenditure overheads, and then we have the efficiency variances. Under the expenditure, we have for both fixed and then variable, and under the efficiency, we have for both fixed and variable. So in this question we have here, the examiner said we should calculate 1, 2, 3, 4, 5, 6, 7, 8. So we are computing these 8 variances from the question. That's what the examiner said we should do. Now, when it comes to sales variance, this is not in the question, but I'm just going to give you an idea about that. We have the sales volume variance, and then the sales price variance. Then we have some advanced variances like the mix and yield variance in relation to that, and some material price planning variance and those things. So this is what we have. I want to quickly take you through the ideas about them, then we can go to the question. Number 1, direct material usage variance is calculated based on the units produced. This is very important. I'm not going to be using any formula here because in variances there are formulas, but I'm not going to be using any formulas here. So your direct material usage variance is based on the units produced, which simply means that we are going to be looking at the difference between the material we should have used and the material we actually use based on the units that we have produced. Direct material price variance is actually based on the material used. The material used. It means the material we have used, how much should we have paid and how much did we actually pay. So the direct material price variance is based on the material used. Having these two ideas in your mind will help you for the labor, because when it comes to the direct labor efficiency variance, that is also based on the units produced. And then direct labor price, here we will say rate variance, is based on the hours used. So that is the idea about how you go about it. So with these 4 concepts in your mind, we are going to now approach the question and see how we can solve it.
What we did, the budget
questions.
Where are question 4?
Question 4A. So,
before the question, said about sending out. And yeah, the old one of that one.
So Chartered Limited manufactures a single product that has a standard material cost of 20 Ghana cedis. That is 2 kilograms of raw materials at 10 Ghana cedis per unit. So we're going to write out the preambles as always. So let's look at a standard cost card in this question. In this question, it was given in story form, so I'm just rewriting it for you to see how it could have been written. So, direct material, we are told how many kilograms? 2 kilograms at, is it 10 Ghana cedis?
Yeah, 10.
Per kilograms.
Yeah.
And that gives us 20. Now, the standard cost card gives us the cost per unit. That's very important. Next one. The standard direct labor cost of $18. That is 1 hour per unit. Okay. So direct labor is $18. So that is going to be 1 hour times what? 18 per hour. Simple. Next one. And standard variable overhead cost of 18 Ghana cedis. That is based, 8 Ghana cedis. That is based on what? Direct labor hours. So variable overhead, that is 8 Ghana cedis. So what does that mean? Or say it is based on the labor hours. It means the 1 hour, okay, at 8 per hour. It's just the same thing. It's the same thing because it is based on the labor hours. Okay. Then it says fixed overhead is budgeted at 34,000 Ghana cedis per month. So fixed overhead, that is given in total 34 Ghana cedis per month. So let's go. During operations for June this year, now it means the examiner has finished with the standard and now providing you with the actual results. Okay? So during June, you are now having the actual results. During June, the company purchased how many? 3,000 kilograms of raw material costing 31,620. Okay, so materials bought was 3,000, how much? 600 kilograms, and that cost them how much? 31,260. 620 Ghana cedis. That's the materials. Then it says direct labor hours used during operations were 1,500 hours, costing 30,000. So labor 1,500 hours, and that cost 30,000 Ghana cedis. Good. The total variable manufacturing overhead cost and the fixed manufacturing overhead cost in June were 11,920 and 35,000 respectively. Okay, so variable manufacturing cost. How much you got? And then the fixed manufacturing cost. Variable is how much?
11920.
11920, and the fixed?
35,000.
Good. Then, so these are the preamble from the question. In every variance question, there is the standard, which is the budget, like the standard we set as for ourselves with the actual. Then it says I or I. Compute the the material quantity and the price variance. That's the first aspect. So direct material variance. Direct material variance. So the first one is going to be based on the direct material quantity, or as it said, usage variance. Is she going again? Okay, so let's go. So these are the preambles from the question, and the preambles will help us to solve. Remember what I said? Direct material usage variance is based on the units that is produced. Now, in this question, were we given the actual units produced? Yes, 15,000. 15,000 units. Can you see that? It says direct raw material costing is and use 3,200 kilograms of raw materials to manufacture 1,500 units rather. That's the actual unit. So let's go. This is how we go about it, and I want you to pay close attention. Assuming we were using the formula, the direct material usage variance would have been the standard quantity minus actual quantity times the standard price. That's the formula. But as I said, I don't do formula, I do the concept. So this is what we will say. We will say that 1,500 units should have used, based on the standard, each unit should use how many kilograms? 2. So, should have used times 2 kilograms. What do we have?
3,000.
That's 3,000 kilograms. So, for the 15,000 units we've used, we should have bought 3,000 kilograms. But how many did we buy?
3,600.
But did use the actual 3,600 kilograms. So what is the difference?
600.
Good or bad?
Bad.
600 kilograms and adverse, right? Because we've used more than what we were supposed to use. But always, variances must be expressed in value. So we bring the standard cost or the standard price per kilogram, which is how much? 10 Ghana cedis. So what do we have? That's the variance. Simple, sweet, straight to the point. 6,000 adverse. So that is how we compute the direct material quantity variance. That's it about that. II is direct. Now remember, they didn't give I am just labeling these out. Direct material price variance. Be careful here. The price variance, remember, the usage variance is based on units produced, but the price variance is based on material used. So how many materials did we use? 3,600 kilograms. So what do we say? We say that 3,600 kilograms should have cost us, what is the standard price per kilogram? 10. So times 10 Ghana cedis. What do we have? 36,000 Ghana cedis. But how much did we pay? 31, 620. Good or bad? Good. So that is a favorable variance. What do we have?
568.
favorable. So the two, when we add it up, that gives us the total direct material variance.
Do you need to add it?
No, we don't have to add because they didn't say we should calculate total. So that is the material quantity and price variance.